Hi everyone, I'm Ben Sweat from LevinPro HC here at the McGuire Woods Conference doing some content with Healthcare Success, the marketing agency. And I'm joined today by Barry Freeman from Lincoln International. Barry, how's your conference going so far?
Great, Ben, thanks. Yeah, it's a very well-attended conference, and just getting here to your booth, I was already had about 10 conversations with people, so there's a lot of deal talk and a lot of activity here today, so it's great to see.
Well, that's good to hear too. Would you mind just explaining what Lincoln International does,
Sure.
what sectors maybe you focus on?
I'm happy to do it. Lincoln International is a global investment banking firm. We're headquartered here in Chicago, but we have offices in 26 countries around the world. Our healthcare group has about 65 bankers here in Chicago, in New York, and then also in Europe and Asia as well. Personally, I focus in two sectors in healthcare services, one being the home healthcare sector, and the other being payer services. Mm-hmm. So health plan outsourcing, and employer-funded benefits underneath the payer services program.
Got it. And which of those two kind of large, encompassing a lot of different subsectors, but which of those sectors is kind of the hottest right now among investors, maybe from a valuation perspective, or just a number of bids you're getting on deals?
Yeah, I would say that across both sectors that I focus in, there are hot pockets in all of them. But on the home healthcare side, I would say hospice is probably the hottest area in home healthcare right now. There's been a number of transactions and private equity investing in the sector with some real marquee healthcare investors like Linden, like Partners Group, making big bets in the space at pretty frothy multiples. So hospice continues to be a hot sector, seeing multiples in the high teens to low 20 times EBITDA from a valuation standpoint, and just being a sector that more broadly is just attracting a lot of investment because of the growth, because of the relatively comparatively stable reimbursement environment, and just the fact that relative to the total addressable market, it's still pretty underpenetrated. So hospice is an area that's capturing a lot of imagination. On the payer services side, I would say, again, we've seen a lot of private equity interest enter the payer services realm, maybe kind of rotating away from other provider categories like physician practices and things like that in the aftermath of COVID. People gravitating towards payer deals, whether that's payer outsourcing, tech-enabled services, and especially in this world of employer-funded benefits. There's been just a real gold rush, if you will, for deals that are in the third-party administrator space, cost containment, any of the sort of clinical management areas for real high-cost, high-spend areas, as well as the drug spend for employee benefits. These are all areas that are capturing a lot of private equity interest right now, and deals are fetching very strong multiples.
What do you think is explaining that shift in their interest from the provider services to that?
I think it's just the ability to escape being put in the gross margin box that provider businesses have between, generally fixed reimbursement rates that don't necessarily move perfectly with inflation, and then the labor cost and the escalating labor cost, and then the resultant kind of gross margin compression that has happened. And so I think a lot of people bought into physician practice management deals pre-COVID, and maybe even during COVID at some level, with the expectation there was going to be a lot of opportunity for both growth in an absolute volume sense, as well as income repair in terms of bundling ancillaries to sort of be able to pay for the debt service that one needs to cover. And that didn't necessarily materialize, and then the sort of labor inflation / scarcity of availability of labor really made those businesses struggle from a profitability standpoint. So there's a lot of private equity investment in physician deals of all stripes, of all specialties that have now been 5, 6, 7 years in the hold, and maybe won't be able to exit, at least, or if they do, not for the kind of returns that were probably underwritten at the time that they made the investment.
Interesting. So for those labor concerns, are you still seeing maybe a depression in multiples for home health businesses as a result, or how are providers approaching labor scarcity but also labor costs?
So I think it's sort of along a continuum. I would say the area of home health care that's been the most maybe adversely impacted from a valuation standpoint has been the Medicare skilled home nursing. So that is the delivery of a nurse level skilled care in the home, or a therapist, physical therapy, occupational therapy, speech language pathology, pursuant to Medicare. And the reason that that's been probably impacted the most is, first of all, there have been cuts. There have actually been rate cuts that have washed through that industry for the kind of original Medicare episodic service delivery. And then, so that's impacted margins, obviously, in the face of what's also been a labor shortage in terms of nurses and cost inflation. So you've got sort of the sort of unfortunate kind of double whammy of compressing top line and escalating cost of service to deliver. And then the impact of Medicare Advantage on this marketplace has also been very profound because the revenue model is very different than the original Medicare model. So in Medicare Advantage, those agencies are generally getting paid like on a per visit basis. And sometimes those per visit amounts could be as low as $110, $120 per visit, compared to like an episode of care where Medicare would pay $3,000 or $4,000 for a 30-day kind of episode. So it becomes incumbent on the agency then to have to really modulate their business model, because you have to go from being able to just sort of run an episode of care to now take about a nurse as a fixed cost and almost run that nurse like a delivery route, like a UPS route. So I have to have so much density along the way so that that nurse can fit in 8-9 visits in a day to just make the economics work. So those kind of competing dynamics have really put pressure on the profitability of a lot of the Medicare home health care businesses out there, which is, I think, translated into probably a reduction in the valuation multiples by at least a couple of turns.
So in that shift of how home health businesses just operate these days, what makes a kind of desirable home health business from the eyes of an investor and from a valuation perspective? Like, are there a couple of signs that generally lead to a very intense bidding environment or just higher valuations?
In the home healthcare context, absolutely. I think that a lot of it goes down to that sort of geographic density point. I think in private equity's been investing for a long time in home healthcare, and I think in the past there was maybe just a point of view that there was a virtue in just having a lot of pins in the map. That we could have 5 different states that we're in, but not maybe in any one of them be really super dense and be really super high on the market share. I think that point of view has kind of given way to a more kind of density comes first perspective, where maybe you're only in 1 state or maybe you're in 2 states, but as long as you really speak for a big percentage of the care that's going on, or you have really referenceable relationships from a referral standpoint, whether that's with a payer or with a health system, such that you're really important in that geography, that is way more important, and that tends to correlate much higher with a higher multiple for the valuation.
All right. Well, it's a good tip for any of the businesses out there potentially exploring a sale in the next 5 years, maybe.
Absolutely.
Well, last question, Barry. What would make a successful McGuire Woods conference for you?
Oh, well, look, I think it's all about finding the next deal and getting the next deal done. So the more networking, the more people that are here looking to deploy capital and looking to get deals done would make it successful. But I'm looking forward to the content as well. I'll be on a panel tomorrow with some other investment bankers talking about the market conditions and the outlook, and be looking forward to being part of that panel. But just good networking here and hearing about deals and getting some deals done.
Yeah. Well, good luck with all that, and thank you for stopping by and sharing your insights.
Thank you.
Thanks, Barry.
All right.